China is a sleeping giant. When it wakes, the world will tremble. So that was said by Xi Jinping. It's a quote that was originally attributed to Napoleon Bonaparte, though I'm not sure that's necessarily correct. But the meaning of that quote is that China has potential that the world has yet to recognize. And I think we're just starting to see that with some of the success stories around new energy vehicles. But for retail investors who see China as a compelling thesis, I think there's some real problems there. Investing in China isn't easy, and perhaps the biggest showstopper for us would be VI structures, what's called variable interest entities. These are companies domiciled in places like the Cayman Islands, and when you read the legalese, you see that you don't actually have rights to the shares that you think you own. You have no legal rights. So even if you took it to a court of law, you couldn't convince a court that you had ownership over the shares that you think you're holding. And that's a big problem. Some say there's a discount of up to 30% for VI listed companies in the United States, names like Alibaba or NIO. So that's a big problem, and even if you can look past that, you still have the CCP and Guanxi to deal with. So this is the idea of networking with your friends, and if your friend happens to be in the Chinese Communist Party, then you better play by the rules, and you better not piss them off. Corruption and inefficiencies be damned. So who knows just how much waste there is as a result of such corruption. And you also have shadow banking. So this is I think upwards of $12 trillion can be attributed to this, essentially what's an illegal structure, banking structure. I did my master's thesis on this, and it's a real problem, but it's how you do business in China. And that points to the dramatically different culture that there is in China that foreigners looking in from the outside won't be able to understand at all. And if they try to understand Chinese companies using translated documents, you run into the problem of English. And here are just a few examples of that. You can go to English.com. There's lots of funny pictures there. And it's not just in China, all over Asia, lots in Japan. Of examples of incorrectly translated words, and this points to the inability of algorithms to properly translate languages. We've been running into that problem here at Nanalyze. Let's hope generative AI, with all its greatness, can finally do something as simple as translating languages, and then English will be gone. Now, we covered a lot of the problems with investing in China in this piece, Dangerous Chinese Stocks. I suggest that you watch it if you're thinking about investing in China. But today's company, UBTech, they're a little bit of a different story. So we came across them in numerous pieces. I've just pointed to a handful here. So they're a Chinese robotic startup, and they were listed as an AI startup, one of the top AI startups in the world as of 2018. You can see in this list just how dominant China was, at least when it comes to AI funding. Now, today what we want to discuss is why UBTech is safer than VI structures, what the company does, which isn't necessarily easy to figure out, and how much humanoid exposure do we get for an investment in UBTech. So this recent article we wrote, Investing in Humanoid Robots, It's Not Easy. That's where we came across UBTech as a publicly traded firm. So we were unaware that they had an IPO. And you can see here, that was late last year. UBTech Robotics, you can see here they had a offering price of $90. So that's actually 90 Hong Kong. So just divide by, I think, 7.6. And I think today it's probably trading close to double that. It's significantly overvalued. We'll talk about that. But you see here, it trades as an H share. So I wanted to introduce you to H shares if you're not familiar with them. So this is the Hong Kong skyline. I remember as a little boy looking at a geography book and thinking to myself, I wonder what sort of people live there. And I always wanted to go explore this mysterious place that I didn't have any idea where it was. And I'm now a citizen of Hong Kong, a proud citizen. I love Hong Kong to bits. And in the 1990s, H shares, that stands for Hong Kong. So these were made available so foreigners could invest in mainland Chinese companies. So China's always been rather protective over who gets to invest in their companies. And There are now more than 300 Chinese companies that trade as H shares. BYD is one of them. So in this case, you actually have legal rights to the shares that you're actually holding. Most of the major economic sectors in China are covered under H shares, certain companies, and they're denominated in Hong Kong dollars and traded in the same way as other equities on the Hong Kong Stock Exchange. So this was from Investopedia, and they said, investors looking to gain access to Chinese firms can invest in H shares or go a much simpler route, indeed, and invest in ETFs or mutual funds. So if you were going to invest in China via stock picking, you'd probably want a portfolio of companies in order to manage company-specific risk, because there's a lot of it. And guess what? That's going to take a lot of work. So before we get into talking about UBTech in greater detail, I wanted to ask you to sign up to our free newsletter. So Wyatt's going to put a link in the comments section, and you can sign up for that newsletter. We will not use your email for anything nefarious, but this coming newsletter, we're going to talk about our new International Dividend Champions report. So it's certainly worth a look. I've found that if you can prove to people that you can help them become a better investor, they're more likely to open your wallet, and those people will become your best customers. That's the approach we take here at Nanolite. So make sure to sign up to that and support us. Let's talk about UBTech. So here's some basic financial data. You can see the vast majority of the revenues coming from mainland China. They have some bits and bobs there, US and Japan represented, and other. So when you look at the growth here, everything looks hunky-dory, right? From 2020 to 2022, you see, now, this is one of the challenges when you're investing in foreign firms and they list all their financials in a different currency. You have to make those mental adjustments very quickly, and sometimes that's tough. So the number represented for their 2022 revenues translates to $139 million. That's not very much, relatively speaking. Now, when you go to Yahoo Finance, you'll see additional information here on the 2023 revenues, and what you see is that they haven't grown very much. Well, in order to find out more detail about that, we can go into their annual report, and they provide this table. Now, trying to figure out what they do is going to be rather challenging. So you have these segments, and the first thing that you might notice is, wow, the education segment sure took a dump from 2022 to 2023, but that was more or less made up for by increased sales in consumer level robots and their logistics. Now, when they go and explain what was happening with that decline in education, we saw this numerous times. Somebody came up with the phrase, some of the projects awarded or contracted in 2023 have not been delivered and accepted by the end of the year, as the standard excuse for why revenues took a dump. So not very much color there, but what we did learn in this annual report is that the margins for these different segments are all rather different. And what we're particularly interested in looking at today would be humanoid robots. And I pulled up their S1 equivalent. So it's 740 pages that you get to sift through. And here you can see represented those four segments, right? And we can start to get an idea of what each contains. We're interested in that segment, sector-tailored smart robotic solutions. There you can see Walker, that's their humanoid. Then Cruiser, that's actually what they sold the most of in 2022. They said 70% of our sales volume in that niche was contributed by sales of first edition Cruiser robots. So I'm not entirely sure what those are being used for or who is buying them. Again, if you lived in China, at least in the major cities, you'd probably have a pretty good idea of what Cruiser robots are used for if they've achieved any sort of meaningful penetration. Now, when we look at a business, gross margins tell us the likelihood of profitability in the future. So people, especially newbie retail investors, get that confused a lot. So they'll say, well, Tesla wasn't profitable. No, look at Tesla's gross margins. They've always had positive gross margins as far back as you can look in their financials. So there's a difference between having positive gross margins and selling a product for less than it costs to produce. That's not a business. That's a subsidized product or service. So when we look at gross margins for these four segments, we see education having fairly high gross margins. You see there 56%, but It also seems quite volatile, jumping around. That's a theme you'll see when evaluating gross margins across all segments. Look at logistics. So it was 15%, then it went down to 14%, then it's down to 8%, and they'll give any number of reasons. If you're willing to sift through those 740 pages, you could probably find some color around what's going on there or not. Then you have smart robotic products and solutions. So that's what we're interested in. That's the niche where humanoids live in, and that has a 50% gross margin. By the way, humanoid robots, that's where the gross margin sits, at least the last recorded gross margin. Then you have consumer level robots. So they say, we've improved our gross loss position in fiscal 2022, mainly from the revenue contribution of sweeping robots, which had a gross profit of over 20%. So selling products in that consumer level segment, which is a fairly large one, at a negative gross margin isn't a very good idea. But today we wanted to focus on Walker, and this is that humanoid robot they've developed. They talk about having the only full stack humanoid robotic technology in China, at least the first to be commercialized. And look how they describe themselves as a leading player in the field of humanoid robots and smart service robots. So in our article on humanoids, we pointed to just how compelling this thesis would be for investors and how difficult it is to get exposure to that right now. They say our humanoid robot Walker is the first commercialized biped life-sized humanoid robot in China. So they developed it in 2018. That's 6 years ago. And only now we're seeing revenues trickling in. So they say for the Walker S series, the company has begun to explore business on assembly lines in new energy vehicle factories. Oh, interestingly enough, that's where two of the more notable U.S. startups developing humanoids are also working with names like BMW, Mercedes, I think. Tesla actually said they're not planning to use necessarily humanoids in their production of vehicles, but what they might want to use humanoids for are producing other humanoids, right? So as soon as you have the humanoid mastered, that's how you scale your business. You just have those humanoids cranking out as many humanoids as they produce, right? So self-replication of sorts. But they say here we've been focusing our R&D efforts on advancing core technologies utilized in humanoid robots, and they're spending a lot on R&D as a percentage of total revenues. I think it was 50% last year or something like that. But that IPO they had, I think the majority of the proceeds went to R&D. So they're all about humanoids, but you need to be careful on this stuff. So gimmicky things, and maybe this turns out to be the way forward, but I'm not necessarily sure, to be honest. It just seems rather useless to be going down the hydrogen path for a humanoid when the thing doesn't even have a job yet. So worry about powering it later when it's actually employed. So the UBTech thesis, the company seems heavily focused on humanoids. That's probably why you'd want to invest. The technology should be reaching maturity, at least based on how long they've had it under development and the R&D spending. If you're an investor, you'll want to track the other sector tailored segment and watch for growth there, and then scrutinize whatever reports you can get your hands on for details on humanoids. So you'll need to go search the Hong Kong Stock Exchange and look for documents that they post and sift through those. There's no proper investor relations section of their website with nice, pretty decks that spell everything out. You really need to dig into the details. It took a half a day just to put together what I found, and that certainly wasn't easy. And you also need to consider that shares are extremely rich right now. So if we look at valuation, first of all, be wary of Hong Kong dollars versus renminbi. So the two are similar enough to where it doesn't matter if you make a mistake. I tried to not make mistakes here. I think this is accurate. So we look at their market cap of $66 billion Hong Kong. So that's 8.45 billion USD. We take 2022 revenues, actually that's 2023, of $135 million. Then we divide the market cap divided by revenues. Now, for our simple valuation ratio, we use annualized revenues. We weren't given quarterly data, so we'll just use last year's. We get a simple valuation ratio of 62. So for those of you that use price to sales, this is more or less it. So our catalog average, I think we calculate this for I don't know, well over 100 companies. Our catalog average is around 6.1, and we say our cutoff is 3 times the catalog average, so that would be 18.3. We'd never purchase shares at this lofty valuation. I think the most lofty valuation in our catalog right now is probably NVIDIA at around 40. So based on our simple valuation ratio, UBTech is extremely overpriced. So just to conclude, the revenue growth stalled in 2023. Why? Well, they gave you that cheeseball excuse. And how much free time do you have to really dig in and figure out what the problem was? I'm sure it's somewhere there in the fine print or not. The appeal here, of course, is their strong emphasis on humanoids as opposed to robotic litter boxes, which they also sell. Revenue has been growing, but it's slowed. So here's a challenge. Try to figure out what humanoid revenue contributions were in 2023. So this is, of course, the most important statistic. Should have been raised earlier. It points to, you see here in this fine print, the percentage of total revenues that came from humanoids. So in 2022, nearly 5% of revenues came from humanoid robots. So that's still not meaningful, and meaningful is probably 10% or higher. And then they have this time frame 4M 2023. I think that's probably the 4th month of 2023. It's certainly not referring to any sort of quarter. It doesn't seem to be the 4 months, the first 4 months of 2023 based on the numbers. So they say that during that time frame, humanoids accounted for 1.7% of total revenue. So see if you can find anywhere the percentage of 2023 revenues that came from humanoids. I couldn't. Now, you need to be careful here because we see a similar tendency from investors in quantum computing where if there's a stock to invest in, then investors feel like they should investing in it. So it's the tendency to think that the 4 publicly traded companies that you can invest in for quantum computing represent the universe. They don't. There's over 100 companies dabbling in quantum computing and some of the largest tech firms in the world. So same thing with AI stocks. So people are desperately looking for AI stocks. Well, the biggest growth stories may not even be public. There's over 400 generative AI startups right now. Someone in our Discord asked a good question. How many are in just wrappers? And that's a great question. So just because there's one company with pure play exposure, it doesn't mean that you should necessarily invest in it. And when you look at all the other firms out there developing humanoids, here are some examples. Of course, Tesla being one of the most talked about. And you see the U.S. represented a bunch. Funny that in this list, which some kind soul posted on our Discord server, I don't see UBTech's robot for whatever reason. But at any rate, if you're interested in investing in China or Chinese stocks, then you really ought to watch this piece first. It's one we did on the nature of investing in China. Please make sure to sign up to our free newsletter. So we'll cover some interesting stuff next week on dividend growth investing, or this week rather. Thanks so much for taking the time to watch this today.